Welcome back. The trade battle between the United States and China is ramping up. The latest round of tariffs going into effect overnight. China is now accusing the Trump administration of trying to bully the country into submission. Over the weekend, China canceled plans for a new round of trade talks. Markets are pointing to a lower opening this morning to start off the week in the face of all of this. Joining us now to talk more about markets and investing today is Federated Investors Chief Equity Market Strategist Phil Orlando. Phil, good to see you this morning.
Good morning.
Your thoughts on this market at this point? You've got the China-U.S. uncertainty, a Federal Reserve meeting this week. What's the driver?
Well, certainly there are a number of things that have been giving us some sleepless nights of late. The ongoing trade war and what's going to happen at the FOMC meeting on Tuesday and Wednesday have been at the top of the list. When I was on last, we talked about the potential for a summer air pocket. And the reality is that the market has only had 2 to 4% hiccups over the course of the last couple of months. That's probably what we're looking at now. The market's done really, really well. We hit a new all-time record high last week. We'll probably see a little bit of consolidation here. But I think investors are going to look forward to the fact that third quarter earnings are going to be 20% plus again. Third quarter GDP is going to be up around 3.4, 3.5%. The numbers are terrific, and investors are going to focus on those better fundamentals.
It's a good backdrop, man.
Phil, we were talking in the green room, and clearly this week alone, the market just was tone deaf to everything that was going on in the news cycle. Is that, to the point you just made, is that because earnings look to be so strong that you're focusing on fundamentals and ignoring, for lack of a better term, noise?
Well, ultimately, the stock market is going to focus on the stuff that truly matters. And earnings in the first half of the year were up 25% year over year. Third quarter earnings, we think, are going to be up 20%. GDP are going to have 3 handles in the third and the fourth quarter, so that's all good. The noise is what's giving you these little bit of hiccups, and now this Kavanaugh thing in the news over the course of the weekend. The things to focus on there is what does it do to the president's approval rating, and what does the generic ballot look like? So that's another element of noise that could result in a little bit of a chink in the armor, if you will. But ultimately, the market will drive through, we think, to 3,100 by the end of the year, based upon good fundamentals.
The polls aren't looking good for the president right now, and they're not looking good for Republicans in the general ballot. So what does that mean, do you think, for the markets?
Yeah, I mean, will the markets pay attention to the midterm elections?
And that could be another source of uncomfort here over the course of the next month or two. Those two drivers, the approval rating and the generic ballot, were 2 factors we were looking at in terms of whether or not the Republicans would be able to maintain control of the House of Representatives. At this point, with those numbers going in the wrong direction, that's probably not the case. So now the question is, are the Republicans able to hold on to the Senate? Now, based upon the work we've done, given the fact that the demographics in the Senate election favor the Republicans are only defending 9 seats. The Democrats are defending 26 seats, and of those 26 seats, 10 of them are in states that Trump won in 16, 5 of them in states that Trump won double digits. So our best guess right now is that the Republicans probably add a couple of seats in the Senate, not lose. But suppose that's wrong. So suppose this whole Kavanaugh stench turns into a situation that's toxic for the Republicans in the Senate, and the Republicans lose the Senate as well. Then you start talking about other dire implications in terms of the president losing control of the Congress. What does that do to his fiscal policy agenda? And those are questions that at this point we don't know.
What about if we, in the short run, if we do get a deal with Canada? Is there more upside? Is that trade uncertainty, is it actually keeping a lid on these stock market gains, even though the Dow hit a new all-time high last week along with the S&P 500? Would the market be higher if we didn't have this trade uncertainty?
That's a great point. I think what strategically the administration is trying to do is sort of focus its attention on China. So we've got this handshake deal with the EU. We've got an agreement with Mexico. We're on the cusp of an agreement with Canada. The idea was to really ratchet the screws on China and create some pressure there. So their economy is slowing. Their stock market's down 20%. And the idea was to try to get some concession from the Chinese in terms of the intellectual property issues and trying to get them to narrow, let's say cut in half, a $375 billion deficit to us, surplus to them. So I think that if we're able to get the Canadian deal, that's another domino that sort of falls into place. and the pressures on the Chinese. Now, from an optic standpoint, they can't demonstrate that they're bowing to the wills of the President of the United States. But there's got to be some saving grace, some face-saving issue here that allows them to resolve those two issues. I think there's strong upside in the market coming if we can get resolution on that.
National Security Advisor John Bolton was with me yesterday, and he made a really important point about China, basically saying what we've been saying for a while, and that is that they are using their economic strength and applying it to their military complex. They're creating these islands in the South China Sea and then putting military bases on them. That's the crux of it. So it doesn't appear to me the Trump administration pulls back on China anytime soon, because it's not just an economic issue. It's not just about tariffs. So we'll see how that plays out. But I do hear some optimism from you in terms of the trade stories. If we get Canada, if we get South Korea finalized today, and perhaps Europe, that could be big market upside.
And positive developments with regard to the North Korea, South Korea developments there. So from my perspective, the upside surprise is going to be positive there on the trade situation. JP
Morgan has a note out this morning saying that it's building a strategy in case President Trump makes a miscalculation on sanctions. The bank making a forecast in case the president gets too overconfident about the economy. It's raising oil price expectations, factoring in the potential for tariffs on Chinese imports. So your thoughts on the oil part of that story?
So I don't know that the Chinese situation is as important in oil. I think Iran sort of works into the mix there as well. With oil, the fact that you've reimposed the nuclear sanctions on the Iranians, taking that crude off the market, that's forced the Russians and the Saudis to increase production in order to make up for that deficit. Let's call it roughly 1 million barrels a day of production. So we've seen oil prices grinding higher, but we're now past the summer driving season. So the supply and demand dynamic is such that, you know, our view is that $70, give or take, let's call it a range of 65 to 75, is probably a reasonable place for WTI to be.
And Brent is at $80.72 a barrel right now, up 2.5% this morning. Real quick on GDP coming out on Thursday. You think we see a good revision?
This is the third revision, not a significant deal. The bigger number to look at is October 26th. The third quarter flash, we think that number is going to be about 3.4%.
4.4% from GDP now at the Atlanta Fed right now.
The Atlanta Fed's up to 4.4?
4.4.
God bless them.
Yes, thank you.
It changes so often, but they haven't gone below 4%, so we're still between that 4%.
Right, exactly.
4.4 and 4.7%.
No, the numbers are going to be strong.
Yeah.
There's just a question of how strong.
We'll leave it there. Phil, great to see you.
Thanks for having me.
Thanks so much. Phil Orlando joining us from Federated.